G'day traders. Today we're going to be talking about what I think is one of the most important aspects of trading London and New York, and that's market maker peak formation and the Asia box. Stay tuned traders, we'll be right back. G'day traders, I'm Stacey Burke from Stacey Burke Trading. Hopefully everybody has been able to capture some of the fantastic movement in the British pound crosses. There's been actually quite a bit of movement in a lot of the pairs. We've spent a lot of time talking about the stop hunting, the market maker structure, the market maker template, trading the different ways to look at staying above and below the box in terms of selling or buying above the highs and lows, whether that's on the daily basis, intraday, weekly high and low, or monthly high and low. Those are the most significant areas on the charts for entering into the market. And part of what we talked about was that has a lot to do with where the money is. So generally speaking, 90% of retail traders will place their orders below or above turning points. And that's because that's what we're taught, whereas the market maker, on the other hand, their trade entries occur at those areas, and largely once they clear the board of all those orders, they wipe off all the money, capture that money into their own accounts. They'll go back to the other side of the market to do the same thing there. Today we're going to talk about what I consider to be one of the most important aspects before we even get to the London Open for myself, and that's peak formation and the Asia box. So we've talked about how the general template of a trading day typically will be consolidation, stop hunt, and trend. Then after the high or low of the session is in place, it will consolidate back and go into the New York close into the Asia market. So if you've had the free iSessions indicator, there's another one that Chris has given me that I'll include the link below too, so thank you Chris for that. Which also shows you the pip count for the Asia box. But what's important to understand is that typically throughout the course of a trading day, there will be 3 levels of rise or drop depending on what type of market that you're in, an up day or a down day. And that's fractal, so even to the smallest level, we'll see 3 pushes consistently in one direction before it will exhaust and then go into the other. So when we go into the Asia box, we will have a high or a low in place, depending again if it was an up day or a down day. But once Asia starts to trade, when it comes off of that high and goes into the consolidation, typically that will now be level 1. So the market has come down, and over the course of the next 6-7 hours will form various different types of templates within there depending on what the market makers are attempting to do in terms of building up order flow in heading in one direction or the other. And the purpose of this is largely designed to probably generate traders entering into the market, so enticing them either to take short or long positions. But it's really important. This can be complicated. They're very smart. They're very savvy about how they move the market around. But typically, if you are able to identify 3 levels in there heading into the Asia close London Open, you will be able to then identify where the next level 1 direction is headed if you're looking at entering into the market. The Asia box high and low will typically give us a range of 25 to 40 pips. I've talked about the significance of 50 pip movements. So often what I will do is I will subtract 50 pips right off the bat down to a certain level, and then I know I'm looking at, as I can mark off the levels, if the market it may make 3 moves down right away, and then start to work its way back to the top of the box, at which point I'll be looking as a sell day potentially. Or as we saw yesterday in the pound pairs, we saw 3 levels of drop off the peak into the Asia close. The pound yen gave a perfect railroad cross entry at 3 a.m. London time, New York time. And the other part of that is looking at the overall market structure. So just in terms of keeping this simple today, we're looking at each day as we start the day, taking the peak formation high or low as we go into the close as our first level, and then beginning to count from there. If you can start, I use 15-minute charts. If you can start to identify those 3 levels of rise or drop as you head into the Asia close, and typically you can get both as well. So as I said, you can get 3 levels of drop right away. It may be a solid candle, a couple of small ones, it's another solid candle, a couple of small ones, or we may see that significantly sort of occur over the 6 to 7 hours. Now again, this is where chart time, going back, printing off your charts, and marking those off and getting familiar with the movements of the charts and seeing the support and resistance levels that you can draw your lines. But also significant that can help affect that is your overall market structure. So where are we at in that 3-day cycle in terms of the Monday to Friday rotation? So if we're in an up week and we're into the second level, well obviously I may be looking at 3 levels of drop for another continuation day into level 3. Or consequently going down, we may see the same thing if we're in a downward market structure. Now today's Friday, so again I may be looking for a Friday reversal off of a level 3 trade, which again this may have more significance where the market may have come off of a large candle peak formation. We may see 3 levels of drop early on and then 3 levels of rise into the Asia close. But again, just marking off those little swing movements can start to give you an idea. Now that's really important in terms of giving you an idea of where the market may be headed in terms of where the market opens at London. Then we talk about other levels with support and resistance. Not only the daily high and low, but the high and low of the week, the high and low of if you're near monthly highs and lows, which today is the first day of March. So we'll be looking potentially to see the month ending on a false move and beginning on a false move. So we could see either a blow off in some of the pound pairs. I've got measured flag targets that are still a little bit above where they're at right now. But again, all of these things are very relevant. The other thing that I pay particular attention to at the close of this box are numbers. So yesterday, the pound yen, for example, came out. It's auctioned down from the high on 3 pushes into the breakout from Tuesday's high, where the market came up. It's auctioned back down, but it was also at double zeros right at the London Open. And that gave us a nice railroad track entry, which became the low of the day. So these are little things, but this 3-push pattern and identifying the peak formation high or low are critical to give you an idea of where we're headed at into the next day's session, or into that current day's session. Now obviously, you may have a rising trend line where we see the market structure trading off of, that sort of thing, but we also may see some patterns within that give you some bias as well in terms of heading in out of that level 1. Peak formation, that also is important as we look at the beginning of the week. So on a Monday, so last Friday, if you take a look at your pound pairs, you'll see we saw the big V drop and rise heading into Monday. So we had a peak formation low in place on Monday morning, which gave us a bias that we were potentially heading into an upward market structure for this current week. That same template applies each and every single day. So again, peak formation, consolidation, stop hunt, trend, you'll see 3 levels of rise, peak formation, and then as we head into Asia, that consolidation phase is level 1. So that your count begins from the peak of the day, and then you should be able to draw or identify those 3 levels of structure, whether they're dropping. So we'll get 3 levels right away, or we may get 3 over the course of the day, or we may get 3 down and 3 up into the close of Asia, at which point we may be looking to sell on that particular day, or at least sell down to the low of the day, which of course when we break a low or a high, that's when we go to break even. Anything prior to going to break even before clearing a low of the day or high of the day, the market maker still has an opportunity to stop you out. Once they've cleared that level and you've taken your position to break even, at that particular point, that move may be over and it may reverse, but you should still be able to go to break even. If you're in a measured move, you can target that down further for profits or above if you're in the long position. So hopefully you got value from today's video, traders, again, we're just piecing this together, but peak formation, high and low, and the 3 push patterns in the Asia box. Go back, print off your charts, spend some time going over the charts and reviewing all the different pairs. You can apply this to any currency, any instrument. The same mechanisms apply. Now again, if you haven't done so, go to my homepage, get my 7-step daily routine for high performance traders. Accelerate your learning, start setting some goals. You have to force yourself to level up and be doing the little things daily that are going to help you improve. The biggest challenge you're going to have is taking the technical knowledge that you have and then being able to perform that in live time. So in order to do that, you have to break things down into the smallest components that when you're there in live time, what will inhibit you from being able to execute? Not only being able to execute to get into the trade, placing your stop, but then understanding how to manage that trade, and then also how to understand how to identify your targets, your profit targets. If you should be moving your trailing stop. I don't use a trailing stop, but the little things that are all going to boil down to you either taking out 20 pips, 50 pips, or 150. And that's the difference, because the market, as it trades, will do all kinds of things to confuse you, to make you change your game plan, the speed of the candles, the length of the candles, large candles at certain times, stop hunt candles, all these little things that are designed to mess with your head. So take a look at this, print off your charts, 3 push patterns, peak formation, high and low. Go back and look at your daily charts. It's the same thing heading into the ends of the month, Monday to Friday cycles, your intraday cycles. It's there everywhere. So stay disciplined, traders, stay focused, keep getting better, focus on the fine details, and hopefully your trading keeps improving. Have a great trading week, enjoy the weekend, and good luck today. Have a great week.
Hi traders, it's Stacy Burke from Stacy Burke Trading. If you haven't done so, please head over to my website at stacyburketrading.com. I create updates on almost a daily basis, and I would love for you to receive them. Just click on the blog. If you want to enter your name and your email address, I'll send you my free audio program, the 7-Step Daily Routine for High Performance Traders. This is essential knowledge for all traders in all markets, and this is for helping traders to master the market with discipline, confidence, and a winning mindset. I appreciate all your feedback and comments. As always, traders, stay disciplined, and may the markets go with you.